What a beautiful day to be trading. We've seen the S&P break 6,000 today. We've seen stocks go absolutely ballistic, hence the news of CPI data coming out. And here we can see CPI inflation reading not likely to shake the Fed's wait and see stance on tariff, which obviously isn't ideal. We do want to see rate cuts, but I still don't think the market is in a sustainable position for that. Furthermore, stock market news today, the Dow Jones, S&P, Nasdaq edge higher as cool inflation data boosts Fed rate cut hopes. But again, I really doubt we are going to see that in the near future. But in this video, we're going to be going over the state of the current market. This is a sort of thing in which I do where I inform my viewers where exactly we can expect the market to be heading in the near future, because we want to make you the best investor that you possibly can be. So let's start off with this CPI data. So this was slightly worse than the expectations were, but it's still a relatively good result. So I would not be getting worried at this point with the CPI. Unemployment ticked up marginally, but markets see it as a sign of rate cuts to be potentially earlier than expected. Again, we'll get onto why I don't think that is later. And the Fed meeting with Powell signaling a one only cut likely this year. So for me, I reckon that'll be late summer, early autumn, but it's very likely it won't be a massive cut. So currently interest rates are at around 4.5, and I do think that we will see that now start to fall down to potential 4 mark. I can't really imagine it will go any further than that. So on core CPI, we saw this come in at 2.4% versus the expected 2.5. So again, really good, but not as good as the expectations. Core CPI year over year, for example, food and energy is approximately up 2.8%, unchanged from April. Month over month, this is a increase for CPI to be 0.1% of an increase. So it is definitely ticking up, but it could definitely be a bit stronger. So it's clear that, inflation is certainly cooling, and that is definitely a positive thing. However, in my opinion, this is where it definitely doesn't look to be ideal. On a nominal health score for the US market, I have a result here of 68.7 with the health score basically coming in at 150 for where the target is. It looks to be as if the market is definitely in an unhealthy position, but it is definitely more healthy than it has been in the past with us now having this score. This is up from last week, but it is somewhat steadily trending on an increase, if you can see that. I know it's very far into the far right of the screen, but what does this really account for? Well, there is quite a lot on here. There's housing markets, there's CPI, there's inflation, you name it. Even the price of eggs is probably on it. It's crazy how much is on my sheet here. So I understand where the Fed is coming from, and furthermore, we have seen CEO confidence hit an all-time low from what I think it was 1976. So the earnings are not as good as they were expected to be. So there's definitely a headwind for the market currently, but despite this, the markets are still rallying. And when you do actually look at this, you might think, well, what are all these? I need to clear these. What is driving this market? Well, currently, when you look at individual stocks, how many stocks do you think are at all-time, 52-week highs currently? Is it maybe 10%, 15%, 30%? Looking at this, we've seen a lot of increase. Well, I'm going to break it to you. It's actually around 8% within the whole US market. So currently there are 293 stocks in the US market that have hit a 52-week high compared to the 77 hitting new lows. The Wiltshire 5,000 index tracks approximately 403 US listed companies, and we can take away from this that there is an 8.6% rate of these companies that have hit an all-time high, a 52-week high. So it shows that there is actually a lot of room for these stocks to run. I mean, we are seeing a lot of stocks such as Micron rally up. We're seeing Novo start to rally up. We're even seeing my arch nemesis AMD start to rally up. Don't get me wrong, this is a great company, especially when you do zoom out and look at the big picture, but I was calling this stock looked overvalued here and it fell, and now I'm starting to see that there is a massive potential in this stock. So you can see here, actually, I've only just seen this, but last week I actually marked a level of resistance here at the the $124 mark, and it has just bounced straight off of that. So, but that's just AMD specific. We are seeing the general market tick up, but if we do zoom out to an hour, we are actually seeing this start to hit a level of resistance now too, with us falling down from the high of 6,050 today, falling down to this level of resistance, in which I marked out earlier as well at 6,011. The market is actually in a long position on the my MACD indicator, and there doesn't really look to be a fair value gap in which it will manage to hit on the hour chart, and the next one on a day chart is realistically all the way down at 5,965. But for the whole ETF, it's very rare that this will correlate massively with these fair value gaps, but it definitely will have a subconscious play on the market. So if we are zooming out and looking at the bigger picture of some individual stocks here, we're seeing companies like Tesla having somewhat of a rally, with today being a bit negative. It's still looking to be doing really well today, but it's hitting a lot of resistance. So Elon Musk has actually now apologized for some of his tweets to Donald Trump, as they were a bit outrageous. I don't want to get too involved. Obviously, none of them are going to see this video, but it was just a bit crazy what the allegations that were being thrown out there were. It was a bit weird, it was a bit much, and not something in which you want to see for the US economy as a broad whole. It didn't really affect the market that much, which was really positive to see, as it shows that something like that wasn't going to affect its stride. And furthermore, today we have actually seen really good news around the US-China relations. So we've seen China putting tariffs on the US of 50% and the US putting tariffs on China of 10%. So Apple will be happy with that news, as they were definitely starting to panic. But China is now having to basically ship a lot of rare earth metals to the US and world supply chains in exchange for Washington easing some of its own export controls on things like semiconductors. So in general, really good news, but I am going to wait for this to be signed in paper before I can really take this as news. But this is exactly what the markets want, and with Scott Bessent now actually saying that he would like to stay Treasury Secretary until 2029. It's fair to say I think he's done a relatively good job, and Trump probably does too, especially now this deal has gone through. I think it's fair to say that is something in which it probably won't move the market, to be honest, but it's relatively good news, because it shows that there is a level of sustainability within the economic leadership. So a few momentum stocks in which I am eyeing up. I've briefly gone over them just then. That's completely the wrong thing. Is Novo Nordisk. So this company is breaking its its regression here. It is now jumping out. If we look on the Fibonacci retracement tool here, we are in this health band here, so there is a potential for it to continue to break out. If you are a trading view investor and you're seeing these arrows thinking, what the hell is he doing? That was a complete mistake. So it wasn't a mistake. I've been trying to learn a bit of few minute trades essentially, and it's gone relatively well, but it's not really what I'm in it for. It's just interesting to know, but ignore that. So I do have a 12-month price target on Novo Nordisk at $142, and the current momentum is definitely looking as if it will be breaking out. There is a large resistance band here at the level of $82, and with us currently being at $79, it looks to be as if this stock is really going to struggle to push past it off of today's data. But I think overall we are definitely looking as if this is just going to obliterate it in the coming weeks. After that, there is definitely still some key levels of resistance, but if you are just thinking, why is his valuation so high? Well, let's have a look at the price targets from a broad section of analysts. So analysts actually rate this to be priced in at a maximum of $137. That is a 74% upside and an average of 25% upside. So there is definitely a lot of price targets on the side of this, analysts on the side of this stock, so it could definitely go parabolic. And similar to similar to Novo Nordisk is Eli Lilly. This is a very similar story. However, Eli Lilly does still look to be waiting for a confirmation of breakout. It is going to really struggle to break this level of 880 approximately, but I think if it does, this stock could go absolutely parabolic. Again, I have a price target of 1,245 and the max of analysts is 1,190. And if you are thinking, why are your price targets so high? That's quite unusual. So these aren't actual price targets for sustainability. That's a price target for a medium to long term momentum trade. So that is exactly where I will set my limit, and I will aim for that. So similar to Robinhood, I previously just sold out of Robinhood. Now you could argue there is still more room for growth within this stock, and there probably most likely is, but my price target, which I set, was $74 way back when. I was adjusting price, my stop loss, and I adjusted it to 74. When it finally hit 77, it went down to 74, and now I'm out. I'm happy to be out. I think the momentum could definitely carry on, but the sustainability of that is definitely within question. Furthermore, looking at the big dogs such as Nvidia, this still looks to be undervalued according to these price targets. And if we do look at these fair value gaps, it could definitely still have a bit of momentum. But today has been a bit of a sad day for Nvidia. It's still a beautiful day to be trading. Don't get me wrong. Every day is a beautiful day if you are thinking that at the start of the video. But there's definitely a lot going for Nvidia at the moment, especially with this China tariff news that will go in favor of Nvidia, but we're not seeing that replicated within its stock currently. So I think it could definitely be a great opportunity. I don't think people are really catching on to this, this China news essentially. This is massive news, and this will affect the markets for the coming months. I don't think we're really going to see the impact of the majority of tariffs until July. I think that will be reflected in CPI and core CPI within July. So next month's CPI, or the month after, sorry, will be really important to watch. But it's fair to say, I think right now we're looking as if the markets could still definitely bounce up from here. It just looks to be as if, especially when only 8% of the total US stocks are at an 52-week high, there is room for this to really rally. But if you know me, you will know I am worried about a little something called Shiller's PE ratio. If I can actually select the whole link. Wow, I'm struggling with this. So on Shiller's PE ratio here, we can see that we are currently at a Shiller's PE of 37. Now, ideally, the mean here you can see is at 17.24. That does obviously go back quite a long time, and it's fair to say that you are expected to be above that, but we are really high currently. 37, sorry, if I can zoom in so you can see it a bit better. This just looks to be pretty unsustainable at these levels, and I did say earlier on that in the video that markets are looking to be overvalued due to earnings basically not meeting expectations from earlier on in the year. So we're seeing companies at quite high PE ratios, and the summary of this is 37. So there is definitely an element of risk currently within the market, but I still think there is a lot of momentum. So if you are a momentum trader, hit a like, hit a subscribe, because this is the channel for you, because we go over bi-daily momentum stocks to really understand where we could be placing our money to take potential profits. But I am not a financial advisor. You should not be taking what I say with financial advice. You need to do your own research. So where are the hedge funds actually placing their big dingo dollars? Well, they are rotating heavily into AI hardware and semiconductor plays. So big net buys from AMD, TSM and Broadcom. These are where the hedge funds are placing their money, and people like Tom Lee have been screaming from the top of the hills for about a year now, probably a bit less, about these small caps, these penny stocks. That's where they think the majority of the gain is going to be coming, but we haven't really seen that yet, so maybe it's about time that we do see that. we're seeing stocks like Nvidia today just not really doing that well after this whole China news. So it's like, why are we not seeing that? So maybe it is about time that these small caps, I mean, I know SoFi is not really technically much of a small cap, but it definitely is not a big cap. So we could expect this to definitely break out. So SoFi is something which I've been watching for quite some time, and it looks to be as if it has now actually broke out of its head and shoulders to an extent. If we do see this stock close above this level of what I set here of 14.78, I think that this stock could have somewhat of a rally up. How much, it's hard to say. There isn't really too much of a fair value gap underneath it at any given point, so it could definitely come falling down, and knowing SoFi, it probably will. So in the short term, we may be seeing a close exhaustion of tech stocks, but dips are still being bought aggressively. I'm watching for a potential rotation into financial or healthcare institutions, which will actually have potential benefits. Maybe not the healthcare, but financial institutions will definitely have benefits from these rate cuts potentially coming up later on in the year. Basically, the risk is on a selective group right now, and for me it looks to be healthcare such as Oscar Health, which isn't breaking out at all, but oh my god, that didn't work, but does have a lot of potential to in the near future, and stocks like Novo, which are breaking out and could definitely continue to have an uptrend, but it's only something which time will tell. So please do let me know in the comments what stocks you are watching at the moment, because I would be massively intrigued to learn about some of the other opportunities out there which I may have missed. But honestly, I don't tend to miss too many because I have my vast Excel system here in which pinpoints all of these stocks to me and shows me where exactly I should be placing my money for these momentum buys. And if you are interested in some of these momentum buys and you're interested in what exactly my systems are chucking out at me, it's completely frozen at the moment because it's so fucking big, but if you are interested, then please do consider hitting like and subscribe, because I do go over these stocks quite regularly, at least 1 to 2 momentum videos a week. So with that being said, this has not been financial advice. You should always do your own due diligence. There we go, we've got it back. I hope to see you for the next video.